It's great to have you both with us. It does highlight, Liz, the reemergence of tech, which has put the S&P on the doorstep here again of a new closing high.
Yeah, I mean, it's such a big sector, such a big influence in the market overall, not just on sentiment, but just on market direction. So we were already in a pretty solid place fundamentally. I mean, we've got earnings growth for the fourth quarter of 2024. Most sectors, I think 9 of 11 sectors have beat growth expectations. And then you bring tech back into this, and it's a further tailwind to just continue to drive things higher. So I think this is a good sign for investors. But don't forget that there are a lot of other places in the index and just in the market overall where you can make money and probably pay a little bit less. So don't take your eye off the ball. I think people are still concentrating so much on what got us here, and we have to make sure that we're broadening it out to other sectors.
Pretty resilient market, right?
Very resilient, part of which is because tech is coming back again, but the rest of the marketplace was kind of hanging in there and actually starting to show some signs of leading to a certain degree. Liz mentioned financials. Financials are still leading on that well, but everybody was just waiting for tech to kind of go into that phase 3, which is a race for dominance right now. This previous segment talked about a race for dominance. That's where we're at. And now that winds will start to blow again, and there's still the welcome mat of the house.
Do you feel confident enough in the direction of the market to say that we're really going to have a lasting broadening? That, you know, these, well, what we had when tech sort of took a back seat, you did have a pickup, and if you look at the breakdown year-to-date of the sectors, I mean, you had so many sectors that had performed pretty well. Is that a lasting trend, do you think?
What's interesting now is you're starting to see the cyclicals perk up, you know, materials, energy, but not just that. Within tech, semis are coming back a little bit. I don't think all the cyclicals will blow at the same time, but if you're going to see nominal GDP growth of 5 to 6%, which is what we've been told, and it's pretty much in the cards, you do get that broadening out. It's going to be sneaky quiet, though. It's not all of a sudden we press a button and we wake up and we're like, wow, look at the rotation. It's going to catch us by surprise for those that haven't been watching it.
But I mean, if it's already kind of happened to the points that have already been made. I mean, you know, financials year to date are up 7.5%. Utilities are up 5%. I mean, you can go down the list. There are a handful of sectors that are up 4%, almost 5%, in some cases 6 or 7%. We've already witnessed this.
Yeah. And look, if you add the weight of financials and communications together, that's about the same weight as what tech is in the index. And if you look at earnings growth from the fourth quarter, financials and communications are actually the top 2 sectors in earnings growth. So there is a possibility. The question has been for a long time, can the market still go up without tech? Well, absolutely, if some of these sectors do it together and if the fundamental story stays intact. And right now it has. You
make a good point. I mean, earnings, right, we had been told coming into earnings season, you know, the market's richly priced, valuations, you know, 22 times, whatever it is. You're not going to get any more multiple expansion. You got to have earnings deliver 15% earnings growth.
Yeah, that's been the
what
story.
You needed to see.
Right? That's the foundation. At the end of the day, you have to grab onto a narrative that's going to take something to eat into that multiple. If you didn't get that, the multiple would be rich. But since you're getting that, and there's probably even more momentum than that, we'll get some manufacturing numbers out at the end of the week. You're seeing Europe perk up, China's stimulus in place, so you could actually see higher earnings growth than that. And then that 22 multiple won't be so scary to a lot of folks.